In this video, I'm going to demonstrate getting started on preparing budgeted financial statements and estimating cash from operations using problems 1353 and 1354 as examples. So I have a manufacturer and they're presenting to us our past year one data, an income statement. We've got our sales and we've got our costs separated by manufacturing and marketing and administrative. And the ask is to prepare a budgeted income statement for year two. Quite a bit of detail in terms of what we're expecting to change going into year two. Our starting point is going to be sales. So I'm going to look through here and see what seems to be related to sales. The second statement here, sales volume is expected to increase by 8%, and sales prices, separate statement here, are expected to increase by 3%. Now, I can simply go through here because sales revenue is going to be variable. It's simply just the selling price times the quantity. I could simply say 2,500,000 for year one, increase that by 8%, and then increase it by another 3%. So again, 2.5 million times 108% or 1.08, and then multiply that again times 103% or 1.03. That would give me the calculation I need. I can also do this a little bit more detailed route. It gets me the same answer and I can prove out the easier route. For example, ultimately, I want to take the selling price per unit, that's the first part of the brackets here, times the number of units sold. Again, I know this looks a bit more complicated. Well, I don't know what the selling price per unit was last year, but I can figure that out and say 2.5 million divided by the fact that I sold 37,500 units. That would be the selling price per unit. I need to increase that by 3%. I can either multiply this times 103% or 1.03, same difference. Take the selling price per unit times the number of units I expect to sell. Again, last year I sold 37,500. I'm expecting to increase that by 8%. So I can multiply it times 108% or 1.08. Again, would get me the same calculation of year two sales are expected to be 2,781,000. Materials are manufacturing costs of materials. So we need to consider the materials are going to be a variable cost. So they're going to be impacted both by the material cost per unit and also our sales volume. Now, we already identified that our sales volume is going to go up by 8%, correct? So that's also going to impact directly, proportionally, our material costs. But you might have gone back to the concepts of any variable cost, I expect it to change in proportion and total based upon the sales volume changing, but I expect the per unit cost to stay the same. Well, that's only if nothing else in the scenario is changing the per unit cost. When I start to read through here, I do see that on a per unit basis, material cost per unit, not in total, is expected to increase by 6%. Now again, I could do similar to what I did for sales revenue because this is a wholly variable cost. 400,000 initially times the sales volume increase of 108% or 1.08, and then multiply that then times the cost per unit increase of 6%, 106% or 1.06, and I would get you to year two materials estimate. I can also do the little bit more complicated route. What's the cost per unit times the number of units, similar to what I did for revenue. Again, never told me the cost per unit for material, but 400,000 in total divided by the fact that I sold 37,500. That would give me the cost per unit. I need to increase that by 6%. That's why I'm multiplying it times 1.06 times the sales volume. Again, 37,500 times that 8% increase means material cost is expected to be $457,920 in year two. A lot of calculations, correct? Let's do a couple more of these together. So I can see that my fixed cash cost right here. Now, normally you would say, even if volume increases, I wouldn't expect a fixed cost to change in total. And that's true unless something else is expected to change the fixed cost other than just the volume. And they do tell us here that fixed cash manufacturing costs are expected to decrease by 9%. So you can do this calculation a couple of different ways. You can take 216,000 times 9% and then subtract it from 216,000, or you can do what I did here, 216,000 times 91%, that's just 100% minus the 9%, equals expected fixed cash cost of 196,560. One more I want to do together is depreciation under manufacturing. Again, it reiterates depreciation charges are fixed, so I'm not expecting them to change based upon volume. Something else did change them though. We got rid of some old equipment with an annual depreciation charge of $29,100, and we added a new piece of equipment with expected depreciation of $42,000. So we'll take our year one cost of $267,000, subtract out the equipment that's no longer going to be there and be depreciated of $29,100, but add in depreciation for the new equipment of $42,000, and that's going to give me $279,900 expected for manufacturing depreciation. I will let you work through several of the other calculations, but I just wanted to give you a head start on this and let you know altogether your check figure for operating profit for year two would be $589,320, and that would be our income statement. The other second part of the problem asks us to estimate cash from operations. Now, many of these numbers I just carry over, like sales revenue, because they don't tell us anything different of being collected into different periods. So, whatever my sales are, 2,781,000, that's my expected cash receipts because I'm given no other policy. Most of them we just slide over, given no other policy. But we also have to consider, are there some things listed here that don't have a cash impact? Yes, there are. Any depreciation items are non-cash items. Keep in mind, when I bought the equipment, when I bought the building, that's the cash outlay, but depreciation is simply just allocating that cost. It's not actually spending the money at that time. So you can see, again, I'm just pulling over some of the numbers that I already calculated. Yes, sales revenue, materials, variable cash costs, and fixed costs that don't have anything to do with depreciation are also going to affect cash, but you'll notice that I didn't slide over the titles for depreciation because, again, those are non-cash charges. Ultimately, cash operating profits will be $962,220. Hopefully that gives you a nice check figure to balance to.